Hello and welcome back to Lunchtime BABLing. My name is Shea Brown. I'm the CEO of BABL AI, a company that audits algorithms for ethical risk, bias, and effective governance. Joined once again by our Chief Operating Officer, Jeffery Recker. Jeffrey, thanks for coming by again.
Thank you for having me. Always a pleasure to be on. Always a pleasure to talk about interesting topics.
Yeah, interesting to us anyway. If you're a policy AI compliance nerd, then this is the place to be. So speaking of AI compliance, I think we've been getting a lot of questions on AI in insurance. And so I spoke last year at a big insurance global conference in Des Moines. And there, a lot of people were asking because regulations are coming out. And so I think we want to start discussing that. So where do we start? What are the kind of questions people are asking? What do they need to know?
Yeah. So this is a topic I've been wanting to talk about for a while, and I do want to dive into a number of industries because I think we do talk about high level EU AI Act, high level responsible AI best practices, governance, New York Local Law 144, obviously. But a lot of this stuff is super bespoke to a particular industry, and insurance is a good one. I think we can talk about this in a number of ways, but I think there's probably three laws that are most pressing. One, obviously, is the EU AI Act, which I think we cover quite extensively. So I'd like to focus more on a North America perspective, a U.S. perspective. And I'm sure there'll be a lot of overlap, and we can interject that when relevant. And there's a number of laws out there in the U.S. that people need to consider. But I think the two at top of mind are, the New York State Circular Letter Number 7 and Colorado Regulation 1011 are probably the two most prevalent. So I'd love to just dive into those. So maybe we can start by giving like a high level of what these two regulations are, why they're relevant toward insurance companies, and more.
Yeah, so these two regulations are very similar, and it's by design. And when we talk about the NAIC, which is going to be the third thing, it will become obvious why that's the case. Both of these are regulations that are adding extra restrictions on insurers, and in particular, insurers that use external data sources or predictive models. And I think the actual term, I should probably look up the actual term to get it right, but it's something like what are they? External consumer data and information sources. And so ECDIS. In Colorado, it might have a slightly different name. But in any case, the point is they recognize, no, it's got the same name. So these regulations are recognizing the fact that insurers are using kind of non-standard data to basically underwrite some of these insurance. So basically figure out what's the risk that this person is going to actually cash in on these on this insurance. That's going to affect how much they're going to get charged, whether they get insurance, all of that stuff. This is critical decision making. So it used to be that it would just be like your credit history. There would be there's a whole field of actuarial studies which is meant to focus on this. And there's all sorts of information that you would sort of appropriately gather. It was very clear in the law already across all of the states and federal law that you're not going to use things like race or gender or other protected characteristics. And so the worry is, and so they're already not doing that. So the worry is that now as people start using other forms of data, like your social media activity, who knows, maybe you have a Fitbit and it's a health insurance, and so you want to know how active somebody is. There's a lot of uncertainty out there about what kind of data are these companies actually using. And so the regulations are saying if you're using other kinds of data, labeled as they just labeled it. And then you're also using predictive AI or predictive algorithms to sort of underwrite this insurance. Then you have to comply with a number of things. Now, what those things are, I think we'll talk about soon, but it generally is you have to do the right kind of testing to make sure that you're not actually using these. There's not these characteristics are not in there, like race and gender and other protected categories. Make sure that you have a good governance system around how you do this. Make sure you handle third party vendors that you might be using. Make sure they're complying with the law, and disclosure and documentation, that kind of thing. So a lot of the stuff we've been talking about around the EU AI Act, it's going to apply here specifically in the insurance industry, both in New York and Colorado, but they're not the only ones. There's a lot more that are coming.
I'm curious just on that point. So we're seeing multiple laws pop up specifically around this topic, and there is a lot of overlap. I'm curious why you might think this is happening, where there's multiple states, potentially multiple countries targeting this exact same thing, especially if there is a lot of overlap. Because Colorado passed this a while ago, and New York just passed this law recently. Is there a need for the second state to pass that? Is there a reason? And I'm curious if you foresee other laws coming up, and maybe would this get rid of a federal requirement, I guess the need for a federal requirement?
So, in general, in the US, insurance has been regulated on a state by state basis. And so this is why, like, you have certain states like Iowa are sort of hubs for insurance, and because the regulations are kind of favorable there, and so it is on a state by state basis. Now, to sort of compensate for that, there is this sort of third thing that we want to talk about, which is the NAIC. So NAIC is National, I think, Association of Insurance Commissioners. I probably got that wrong, so fact check me in the
National
comments below.
Association of Insurance Commissions, yes.
Yeah,
Commissioners,
okay.
yes.
Yep, that's right. So these are insurance commissioners from all over the state, and what they do is they get together to kind of decide on some, what are the guidelines we want to have, what kind of things do we want to pass statewide, across our different states. It's a way of sort of getting the states together and figure out what are the initiatives they want to do. So what they passed, they had guidance not that long ago, which was essentially a model. What do they call it? Model bulletin on AI systems. And we can link that in the comments below if people are interested. But essentially, this was like kind of model regulation. So they recognize the fact that AI is everywhere. They all got together and they've commissioned studies. They investigated it. They did a lot of work, and they said, okay, we think that there are certain things that insurance insurers have to have in place, and any of the vendors that do like underwriting for those insurers have to have in place to mitigate the risks that we recognize. And discrimination is kind of the biggest risk. I'll just point that out. So they produced this model bulletin, which was basically like a model law or model regulations that other states could adopt. And so what we're seeing is that some states are adopting it sooner than other states. But if you go to their website, you can literally see a map which will show you the states that are like considering it, that have already adopted it, or some version of it. And so it's coming. And the reason is there's a national strategy. What's nice is, well, not nice, depends on your perspective. This is, since you know this, you can start preparing ahead of time and start implementing some of the compliance program. And so when I spoke at that global conference on insurance in Des Moines, my panel was on these sort of compliance requirements and how you prepare for that. And they've been talking about it for several years now. The insurance industry has been talking about it for several years. I think what we're seeing is the target audience for who's going to be watching this and caring about it is that person who's like now really got the rubber meets the road and decide, how do you really implement these controls, these requirements, given all the other compliance requirements that are coming along the line, giving the uncertainty and that kind of thing. And that's, people are still struggling with it, even though they've known about it for a while.
Yeah, that kind of, I don't know if you can talk to this, but I'd almost like to zoom out a little bit. And so there are various industries that are being very proactive about, AI regulations, AI governance, best practices, and all of that. Do you think that this adds to the web of complexity with all of these regulations, especially say if you're doing work both in Europe and you have the EU AI Act, and say Canada's got something in the books as well, and you're in multiple countries? Like, how much do you think there is going to be overlap versus just chaos?
Yeah. So the good news is there's going to be a significant amount of overlap. You just have to really plan well. So the features, the things that they're asking for um, in these laws essentially are the kind of things that all the other laws are going to be asking for. And so what you need to do is just make sure that you tailor what you do to have do the cross correlation between these things, right? So risk management and governance, bias testing and mitigation. Those are things that are required by in other industries and other jurisdictions as well. Third-party vendor oversight, that's required in the EU AI Act, for instance. So you're going to need to deal with it. Transparency and documentation. These are not things that you enact in isolation to comply with one single law. So if you're an insurance company, you're going to have a ton of compliance needs, right? And so you have to comply with insurance specific stuff, which is what we're talking about. But you also have to comply, like you're probably using algorithms to hire people in your system. You might be using AI to manage some of your employees, like tracking them, like once you've hired them. You might be using chat bots or things to make your life easier internally in the company, which might have compliance issues or at least risks associated with them. So as a company, as an organization, the compliance that you have to worry about is going to be much broader. And you have to think about, how do you not reinvent the wheel every time you're trying to comply? And I think the solution is looking at what are the common things among all of these laws.
Awesome. Yeah. And that, just a point I always like to highlight is get started now on making a repository of all your AI tools and with any of these regulations, because they're sprinkled everywhere. There's a lot of tools that, a couple of years ago might not have had AI, now has AI in it. And, just speaking to people broadly, often people don't even realize what they're using is an AI tool. Um, so it's a good practice, kind
Yep.
of get ahead of that now. But you highlighted four compliance areas. I'd like to break those down one at a time and kind of dive in and see specifically what an insurance company using these tools, how they should consider this and what it means for them. So I'd love to start with risk management and governance, and kind of say, hey, what are some high level best practices? What are the things people need to consider for that?
Yeah. So there's a few things here. I think that probably anybody working in an insurance company in compliance, is who we're talking to here, knows about a compliance program and risk management program. The question, so what that is going to entail is assessing risk associated with a particular activity that you're doing. In this case, it's the use of this external data and AI. Quantifying that risk in some way. Sometimes that's a monetary value. Sometimes that's a probability likelihood that then gets turned into some other kind of number, normally monetary. And coming up with controls and risk mitigations and monitoring those controls over time, right? This is something that they're used to. But the question is, for this, is that those things are really hard to quantify, and there's potentially some upskilling that you would need to do. So your average enterprise risk management person, risk professional, is probably not fully equipped to understand what the risk of bias or potential bias in one of these AI tools might be. So you need to first get the inventory, as you say, and then start sort of surveying who you have available in your compliance program. This is all assuming that you have a compliance program, right? A enterprise risk management program. If you don't, then we can have a different conversation. The understanding, do you have the right kind of capabilities? Where do you find those? And then getting the right kind of piloting of all of these things. Some important features are the risks that you have to monitor are going to be unique, and so it's going to involve some technical testing of your system. So that sort of it spills into the second thing, which is bias testing and mitigation. But you need to have your risk management program has to take that as input. So that's a typically non-standard thing that you have to do. You also need to have it report directly up to some senior management. That's in the laws themselves. So you can't just like go tell Joe from who's an actuary in your company and say, Joe, it's your job to do this. Go fix it. So it has to be, you do have to incorporate it into like the sort of internal audit, the way you report up to senior management. So that's a necessity. And yeah, I think that's basically it. There's tons of details I can say in there, but the moral of the story is it's going to require new types of risk assessments. So you have to quantify those risks, in particular the risk of discrimination based on using AI, and you have to find a way to test it and mitigate that. That has to be part of your governance and risk management framework.
Yeah, and I'll just add to that too. I mean, when I hear you talking, it does sound like it can be a bit of a daunting task. There are a lot of resources out there that can help people. We especially have a ton of resources. We have like downloadables and blogs and other babblings on this, courses on this. So it is something that you can quickly learn how to do. Well, I shouldn't say quickly, but it's something you can learn how to do. But it's a little more than just your average risk assessment for sure.
Yeah, so we have a very specific course on this. AI risk and impact assessments, or maybe it's algorithmic risk and impact assessments. We can find a link to that. But it's trying to solve that exact problem, is that this is not standard. And so there's like a delta on the skills that you need if you're a risk professional. It's not a massive delta, but it does take some sort of deliberate thinking and upskilling in like a very narrow niche area.
So jump on to that next one then. You already kind of touched on it a little bit, but maybe dive in a little bit more and again apply it specifically to insurance, bias testing and mitigation. What does that look like? What does it mean?
Basically, so bias is a very straightforward thing, that you have an AI or predictive model that could potentially perform differently, i.e. give different results based on some sort of, in this case, what they're worried about are like protected characteristics, things that it shouldn't depend on really. And there will be some arguments in the industry about risk-based discrimination is not necessarily discrimination, but let's leave that aside for a second. You're trying to test the performance of that algorithm, the accuracy, some metric of that AI system as a function of whether you belong to a particular protected category. Now, in insurance, it's very straightforward that they're really talking about disparate treatment. So the disparate treatment means I am going to consider that protected category. So I'm going to consider your race, or I'm going to consider your gender as an input, and then that's going to affect the output. So because you are Jeffrey and you're a white man, it's going to change the way I predict, how much I should charge you or something. That's prohibited. That's disparate treatment. What these laws are adding on top of that is that they are aware of the fact that even if you don't consider all of those protected categories, some of them could be proxies for those protected categories. So in Colorado, they don't talk about it as much. In New York, they really drill in on, you have to do an analysis of, are there proxy variables in this data that you're using for the predictive models? So that means of all the inputs I'm taking, like your social media behavior, whatever other extra stuff I'm using, do some of those correlate strongly with protected categories? And if they do, what this is saying is that basically counts as disparate treatment, because you're measuring essentially one of these protected categories by using that data. Now, it doesn't, there's one step further in, so if you're in the hiring situation, you also have to worry about disparate impact, which means even if there aren't super strong proxies, if effectively the numbers depend on a protected category, then that you're impacting that particular group disproportionately compared to other groups, and you have to also worry about that. This doesn't go that deep, but my recommendation is doing that proxy analysis is essentially doing disparate impact analysis, because those proxies cause disparate impact. And so I think opening up the lens of how you consider and test these systems is going to involve being much broader with the kind of testing that you do compared to sort of typical actuarial testing that you might be used to.
No small task.
Yeah, no small task. And, since we're plugging our courses here, we also have a course on testing for bias, but we've got a course on almost everything. So I won't beat a dead horse. But we do have a bias, accuracy, and statistics of AI testing. Covers exactly that methodology of how you do sort of basically black box testing for disparate impact or proxy variables.
So the next one, third-party vendor oversight. What does that look like, and what does that mean?
So what it means is, in all of these laws or regulations, rather, they are pretty explicit about, it's on you, insurance company, to make sure that you comply with these laws, and you can't say, hey, I used this vendor's tools and they told me it was fine, and so it's their fault. That's not going to cut it. And so you can't pass really the liability off in that way. So that means you have to, as an insurance company, do your due diligence to ensure that those vendors, and so when I use the word vendor a lot, what I mean is somebody else created the AI or the data set that you then purchase and then you use for underwriting, right? Or you use to give insurance. That's the vendor. And so it's a third party. And so what this means is the level of procurement and the level of due diligence you have to have when you're purchasing AI or procuring AI or external data is going to have to be higher. Because if you don't have access to the data to do the testing, like for proxy variables, for instance, then you have to ensure that company did it. And so most of the companies we work with basically are those vendors, because and for a variety of regulations, not just AI or not just insurance, but those vendors will come to us to audit them and provide assurance that they are complying with some particular law or they're complying with some best practice. Because then what they do is they submit that audit report to, let's say, the insurance company in this case, and the insurance company is using that to mitigate their risk, because they're like, okay, they told us that they comply with, let's say, New York Circular number 7, and an audit company has checked those statements and ensured that they actually are doing everything they say they're doing. But it's causing, this is going to be a major task for insurance companies to manage, and there's just kind of in the beginning phases of it from our experience and who we've talked to.
Yeah, and it's probably going to be an opportunity too, not just for insurance companies, but vendors developing tools to kind of differentiate yourself, getting ahead on this, how you make certain things available and accessible, especially when you're creating like an audit trail. My guess is there's clearly opportunity to be ahead of the curve and show best practices in that regard. So the last one here is transparency and documentation. So I guess, like, what does transparency mean? Is probably a good question for me to ask. And then, like, what kind of documentation needs to be considered and provided?
So, yeah, I mean, I think so. Transparency in this case is really like informing informing people, your customers, that you're using AI when you're figuring out when you're doing the underwriting process. So it's just notifications, and the laws, and it depends on the state, will specify different levels of how you need to do that. But the basic idea is let people know that AI is being used, or let people know that this external data is being used. Now, it depends. There are some scenarios where you might have to allow them to fix information that's wrong. That's one scenario, and so you got to look at the different states to figure out whether that's part of the law or not. But it's probably going to be part of the EU AI Act. So if you're operating in Europe, you might as well do it anyway. Give people the right to be able to fix their data if it's bad.
I can't remember. Is it also in the Colorado AI Consumer Protection Act? Do you remember?
That's a good question. I'll have to check. So maybe we'll put that in the notes at the bottom, like whether it is. I think it is, but don't quote me on that.
Probably something you should consider, anyways.
Yeah, for sure. It's becoming best practice, and it's in the guidance, like at the federal level, for a lot of different agencies have put out, FTC, EEOC. Um, they're all putting out guidance, and this is one of those things, like informing people and then also giving them opportunity to correct things that are wrong. HUD really cares about this in the housing space, and so it's just becoming a part of doing business. Probably will become part of doing business. Um, the other thing is documentation, and for documentation, this is really to allow. So there's some documentation around just the like keeping track of what data you've used and all of that, but there's a ton of documentation around all of these other requirements, making sure that you keep documentation about your risk management system or your AI system management system and your use of that data. It's really about allowing these commissioners to come in and check to make sure that you are compliant, and so they want that documentation there so that they can check it. And the Colorado AI Act, which is kind of the nickname for it, is also includes that sort of information where you got to keep the documentation. The actual EU AI Act has that the same thing, and so no matter what, if you're doing some of this stuff, you better be documenting and tracking it. So document management is going to be pretty important. Um, and also, if you have people like BABL auditing you, we're going to ask for that stuff, and so it helps to have it all in one place anyway. Yeah, so that's the gist of it. It's inform people that AI is getting used or external data, and then keep careful documents about how you are managing those systems and make sure they're available.
Awesome. So I guess with all of that, the overview of those four things, maybe a good segue or a good final thought is where do people start? What are some best practices to kind of put in place today as you work towards this?
Yeah, so I'm going to just go off the cuff here because we're in the midst of helping a lot of companies trying to do this stuff. One of the probably the hardest challenge is that risk assessment, just getting yourself organized around the risk assessment bit and the risk management bit. So if you have an enterprise risk management or a model risk management or some other kind of framework that you're using, like COSO or ISO, even for security, let's say for like information security or cybersecurity, if you've got some centralized risk management framework, the toughest task is to get this new kind of like bias concepts, discrimination concepts into that risk management framework in the context of AI. So make sure that you have figured out, do you have enough people in your team that understand this? Have you figured out the exact framework? And how do you sort of pilot that early on? That's one. Inventory is another. You had mentioned that earlier. That's probably the first thing. Just know where you're using AI and keep track of what vendors you're using. Is it internally procured, like internally developed or externally procured? Get visibility on that. And that is probably the core of getting started. The next step after that, so let's say you've got that fixed and it's like you have a pretty good sense, you know what the laws require, you know roughly that you've got the risk management system and you have some internal governance and it reports up to the board or senior management. Then you start thinking about how can I make this more general for every state, for every jurisdiction. And then you start looking at more normative frameworks like, do you want to implement NIST AI risk management framework? Do you want to implement ISO 42001, for instance? So we've talked about both of those on the podcast. Do you want to start thinking about assurance around those? I'm biased because we do assurance and audit, and we think that's a pretty valuable framing. Even if you're early on in the process, it's a great way of thinking about the problem. Like if you know people are checking your homework from the beginning, the level at which you execute that homework is going to be a whole different level. We've seen it already.
Also, yeah, it gives an organization a good structure.
Yep, exactly. But I think that's the main nucleus of this, is that there are new risks. There are both compliance and sort of reputational that come with AI. Get that risk management framework working. Make sure there's some basic governance up to senior management, and then start looking at how do you implement something that's a little more uniform, that's going to cover things like the EU AI Act or other regulations that come down the pipe.
Awesome. That was great. I really enjoyed this one. I think we could probably dive in some more, but I think this is a good rounded out episode. The one thing I would just say to the audience is I think we're going to play around with Lunchtime Babbling, come up with some different things to talk about. I definitely want to dive into more industries. So if you have an industry you'd like us to touch on, finance, agriculture, ed tech, whatever it is, something even super niche, leave a comment, contact us on the website. I think we're going to come up with a number of good things in the future.
Yeah, absolutely. And I'll add that, like, I'm a recovering professor, and so I love to teach. And so if there's a really narrow thing that you want to learn how to do, or even a narrow problem that you're facing right now, like I don't know how to do the risk management framework, or I don't know what the right procurement questions are, put those in the comments, because we'd love to talk about really specific problems, because that's where we thrive. And so let us know about that. If you haven't subscribed and you're watching this on YouTube, we'd love a like and a subscribe. That helps us. If you're listening to this on a podcast, thank you so much for listening. And we'll see you again on the next Lunchtime Babbling.